This voice is taken from an article with the title, The Impact of Hindsight Bias on Post-Trade Analysis and Decision-Making, which has been published on TraderTalks.net. Hindsight bias is a cognitive bias in which decisions and events that have already occurred appear to be more predictable than they actually were before the occurrence. This can lead to an overestimation of one's ability to accurately predict future events and outcomes. This bias can also affect post-trade analysis and decision-making. Post-trade analysis involves analyzing the performance of a particular trade and making decisions about how to improve future trades. Hindsight bias can cause traders to overestimate their ability to accurately predict future outcomes based on past performance. This can lead to the development of false beliefs about the predictability of future markets, which can lead to poor decisions when making future trades. Hindsight bias can also interfere with post-trade analysis by leading traders to overestimate the accuracy of their past predictions. This can lead to a tendency to focus on only those trades that were successful and ignore those that were not. This can lead to a bias in the analysis that could be potentially detrimental to future trading decisions. Hindsight bias can also lead to a tendency to attribute success to one's own skill rather than luck or chance. This can lead to overconfident decision-making based on overestimated ability. This can lead to a lack of risk management and can ultimately lead to losses. Finally, hindsight bias can lead to tunnel vision in post-trade analysis. Traders may focus too heavily on past performance and fail to take into account other factors such as changes in market conditions or macroeconomic trends that could impact future trades. This can lead to a lack of foresight and potentially poor future trading decisions. Overall, hindsight bias can have a negative impact on post-trade analysis and decision-making. It can lead to overestimation of one's ability to predict future outcomes, a bias in post-trade analysis, overconfident decisions, and a lack of foresight. To minimize the effects of hindsight bias, traders should be aware of the potential pitfalls and use a variety of sources and methods to conduct post-trade analysis. By taking into account multiple factors and avoiding the pitfalls of hindsight bias, traders can make more informed decisions and potentially increase the success of their trades.